What is good, guys? Welcome back to the channel. And today I want to show you guys how I use the daily candles of each day and using those to validate my weekly bias. So if we go into the week, we always want to have an idea of what will be the most likely direction for this weekly candle, and then according to that we want to position ourselves within those moves happening then on the high probability days within that week. And I want to show you how we can validate this bias which we have each week and update our bias according to each daily closure from Monday all the way to Friday. And we will use this current weekly candle we have right now, Thursday, and I will show you guys how I was adapting my daily bias during this week. Now, if we take a look at the last weekly candle closure, we can see that we have inside a higher time frame overall bearish weekly order flow. We saw this large displacement candle to the downside after trading into this weekly imbalance. You can see here the candle bodies have been respecting the imbalance, and then we formed also this swing high. So we would expect for the next week to see continuation to downside on the weekly. Now, if we have that bearish weekly bias, we go down to the daily and refine that bias into our expectation for the week. Then if we also take a look at the economic calendar, because that's also obviously the roadmap time-wise to know when can we expect volatility injection via high impact news, then our roadmap is as mentioned on the economic calendar. If we check that one for the current week, then we can see that we have a minor FOMC news event on Wednesday late in the afternoon of New York time. And then we got the remaining red folders on Thursday New York session and Friday, so tomorrow's New York session. So knowing that, we can anticipate that the highest quality of moves or the highest probability days will be in the second half of the week. Meaning, going into next week, we should be aware that we can still look for trades early on in the week, but if price is giving us indications that the move we're looking for might happen in the second half, then we have to adapt our trading accordingly within those first 3 days. Now, on the daily, again, we check what daily PD arrays, liquidity pools do we have on the daily time frame. And as you can see, overall on the daily, we are in a consolidation profile, meaning price in a range. Why? Because we've taken out major sell side of the previous years in the first quarter of 25, and therefore we know expansion always leads to consolidation. So the larger the expansion, the more longer the consolidation will be as well. On the daily, as you can see, we have tapped daily imbalance, this volume imbalance, then we got below, and once we have seen price forming this bearish up close candle, the expectation was to see price trading into those daily equal lows. And as you can see, we have taken out that first daily week swing low, and we got those two relative equal lows right below. Now, what else do we have? We have this daily bullish order block, which is resting right below those daily equal lows. So the bias for now will be bearish until we take out this low, and then we have to adapt our bias depending on how price reacts to this daily bullish OB. We opened up the week and price immediately dropped into the sell side. I also did not expect any large pullback there on that opening. I was expecting price to give a small retracement into this dealing range we formed on Friday. Small pullback, swept at a week high on the hourly, and then dropped into the sell side. So now we know, okay, on Monday we have hit now the daily sell side, tapped into the daily bullish OB, and we also closed above those lows. So we have a daily swing failure of this low. Also formed a daily bearish imbalance. Now in this case, we have to keep in mind that now with this closure, there are two potential scenarios going into the next few days. We could either see price taking out the Monday range high, tapping that daily imbalance, and then continue being bearish and simply continue into the low, which resting below that OB. Or we could say, okay, price has now taken out the external liquidity, tapped the daily OB, and we are overall in a ranging daily profile, meaning if we're trading at range lows and we fail to break lower, we can see price to trade back into mid-range. Keeping in mind the internal to external logic, which I also covered in one of my recent videos, then we can say, okay, price took out external, and now if we look out for internal liquidity pools, then we got this daily week high, and price could then run from external to internal. Now, how do we decide what is most likely going to happen? We now want to see how price is reacting on the intermediate time frames, such as the H4 and the H1, to their daily imbalance. If we trade higher, see then rejection lower, then price is clearly in a bearish order flow, and we can look for more sells from the daily imbalance into the higher time frame weekly sell side. However, if we get a closure above that daily imbalance on a daily basis, then it's most likely that price wants to reach for that daily week high and also reprice into a discount of that dealing range from the swing high to that low. Now, for that scenario to be more likely, it would also be more high probability if the next day is now forming a swing low here, meaning Tuesday is not able to take out the Monday lows. Now, we have the daily closure here on Tuesday, and we did close now above this daily bearish imbalance, meaning this is our trigger now on the daily that we expect before price might continue being bearish. It wants to run the buy stops resting above this daily swing high. As mentioned, we also formed a daily swing low, which would also support price wanting to return back into a premium of this dealing range. Then if you check what happened on the hourly, you can see price traded on Tuesday into this daily imbalance. And that's where I told you want to watch out for on the hourly if price is able to displace lower. What we could see, price retraced, closed on the H1 already above the middle of that daily imbalance, and also left behind a bullish H1 fair value gap. Now at this point, if price would be selling off from here, closing back below this H1 imbalance and back inside the previous day's range, the Monday range, then we could look for bearishness the next day. But as you can see, price retraced into the H1 imbalance and then traded higher and closed above the daily imbalance. So at this point, our bias would be to look for the expansion into the highs from that daily inverse fair value gap and this bullish H1 fair value gap we have formed here on the buy side. Also, those down close candles are a bullish OB on the H1. Now, again here, a high probability key level, we have an inversion fair value gap aligned with a fair value gap on the buy side. And we have a weak high above, which should be ideal for a manipulation to then see expansion higher. And you can see here in Asia, to go to low and then expanded higher. On Wednesday then here, I was potentially expecting a resweep of that low as this H1 expansion failed to continue being bullish. So therefore I was open to see potentially price taking out this H4 low, H4 week low above the inverse fair value gap one more time to then continue being bullish. But price ended up leaving those equal lows, also no SMT between euro or pound. But then price ended up being bullish, closed back above those down close candles, and at this point I was expecting price to expand higher from that bullish OB on the H1. Now keep in mind, on Wednesday we still have our first high impact news event of the week, meaning the interesting part of the week is still about to begin according to the economic calendar. And as you can see, then we expanded higher from that OB, and on that day we again had an Asia session mover. Then again on that day we saw price expanding once again in Asia, like we've already seen on Wednesday. That's also why I was not able to catch the moves here on Wednesday and Thursday, because all of these moves I was looking for happened in Asia. And then also here, no SMT, no stop run, so also for me no opportunity to get into longs on Wednesday New York session. But that's part of the game. and you can change how or when price is moving. You can only manage your entry, your stop, and obviously your profit levels and what you do in between. Again, we check the daily closure. We can see we used this daily inverse value gap to then expand above this daily high and then also into a premium of that higher time frame dealing range. And then again, what happened once we tapped the premium and took out the buy stops? We see heavy displacement lower and we closed back inside that range. So now again at this point, our bias is now again bearish because we swept those highs, saw displacement after trading into a premium, and we now expect continuation into this low and then potentially now this low because we went from external to internal, and now we could expect price to reach into external, which would be those weekly lows here. So if we check now how we're trading as of now, then we can see that price, obviously a daily closure, still has a bit to go. But as of now, I want to watch this H4 bearish imbalance to look for a continuation lower into those equal lows here, first of all. And then, as mentioned, the potential weekly sell side we have right below. On the H1, similar situation, we have now this H1 breaker here and an H1 imbalance. So again, we have PD array alignment of the former buy curve with now the sell side of this potential market maker sell model here. So now again, tomorrow we have New York session red folder. So I want to see if price can retrace into this key level now on the H1. And then I want to watch if price is showing me lower time frame displacement out of the key level to then look for further sells into those equal lows, which would be the Monday lows. Tomorrow also the last trading day of May, so we also got to keep that in mind. Potentially you'd also see only a consolidation or retracement and then this move to play out next week, meaning in June. But yeah, we will see how price is trading heading into tomorrow. Now to give you an example on how I used those information to frame my euro bias, let's take a look at the euro chart as well. Going back to Monday, the initial bias was to either look for continuations of that daily OB here into the daily equal highs right above. But obviously with the breakdown of DXY, we obviously had to keep in mind what DXY is doing. If DXY sells off from that daily bearish imbalance we formed on Tuesday or after Monday, then we could have looked for an expansion from the OB. But if the bullish case, which I outlined by a closure above the daily bearish imbalance, comes into play, then we also can anticipate euro to run this daily week low and then continue being bullish from that low. So Monday formed a daily bullish value gap, same as we formed on DXY. So we mark that one out. And now we watch what Tuesday is doing. Tuesday closed below, meaning now we have here a daily inverse value gap. So we now expect price to sell off from that inverse value gap into that week low, and then we want to watch for continuations higher. If we check what happened, as you can see, price tapped into the daily inverse value gap, and then on the next day we saw price, so today, dropping into the daily low and also into this volume imbalance we have left behind in the last few weeks. So manipulation of a week low into a daily bullish key level in a higher time frame bullish order flow. So now we can expect price to run the buy side of euro. Also today's daily candle, if we can close here now in about 20 minutes, will be closing above this inverse value gap, which would then be a reclaimed value gap. And then we can expect price to now trade higher from that H4 imbalance into the equal highs. And that's the key level we then will use tomorrow to look for lower time frame setups to form, ideally around New York session where we have news, to then displace into those daily objectives. And that concludes today's video. If you found some value, I would appreciate a sub and a like and comment, and see you guys in the next one.